You know, honey, I got a song I wrote just especially for you. I want to sing it. Just for you.
What is it?
It's called Hey Good Looking.
Oh.
Say, hey, hey, what you got cooking? I'm about cooking something up in me. Say, hey, sweet baby.
Good morning, everyone. How's it going?
Morning.
My name's Miranda Martin, Director of Symmetry Financial Group, and the Ryan Miller, Rob Puckett, Marshall Whalen Hierarchy. How's it going out there, guys?
Good day, Matta.
Oh boy, I know conference is at a really important time, and we just want to share a little song with you that we were just kind of getting geared up for some of the stuff here that we're going to be working on at conference, and just thought it would be a fun way to to open the call. So we're going to be cooking up some awesome stuff for you guys today for your second week of onboarding. And we've got John Ziller on the line, we've got Larry Grossman, and then we've got Jim Archer as well. And we're going to dive into something, guys, today that this right here has been an absolute game changer for me in the home. This is something that I actually do every single time that I meet with a client. What we're going to talk about today is the fifth topic on our steps for success in your second week. But this topic today, really, the highlight of it is it's going to make you different than any other agent that this client will talk to or that has talked to. So really what happens with the strategy that we're going to show you today, if I call someone, John or Jim or Larry, have you ever called someone and they say, listen, I've already met with like 6 other people?
Mm-hmm. Yeah.
Or I don't need anything, I've already looked into that.
Yeah.
I don't know of anyone else that goes into this material. And when I was brand new, I was lucky enough to have this video very similar to the one we're going to share with you today shared with me. And one of the things that I did as a brand new agent is I just watched this video over and over again. And I mastered this concept. And what I was able to do is build like, trust, and understanding right from the get-go. When I did this thing we're going to show you, John, I actually had people in the middle of me doing it say, all right, Miranda, just 1 second. And they looked at their spouse and they said, you call Bob and you cancel that policy we put in with him last week. He did not tell us any of this stuff.
Yeah, true.
And I'm like, oh. And that would happen like once or twice a week when I would do that. So I just absolutely just embraced the fact that they've talked to other people after that, because I just knew that I was going to be 5 steps ahead of everyone else.
Yep.
Anything else that you guys want to add to this topic before we kind of get into the meat and potatoes of how it works?
No, this is Larry. I just think it's really crucial because we are different and we take pride in what we do. And because of that, we can have the confidence knowing we're doing the right thing for the client. And when you come in with confidence, people pick up on that and it helps set us apart. And I'm a strong believer in this. I think it really does help because they're not getting this from other agents. They're getting just somebody walking in, small talking them and just trying to sell them a policy. So I just think it's crucial.
Cool.
And I think,
guys,
oops, sorry, buddy. Yeah, all I was going to say is I think, yeah, that it really does. It does exactly what you guys are talking about. But in addition to that, it's kind of like it's kind of like a roadmap. And it's almost like letting them know kind of what you're going to do even before you do it. So they have kind of that peace of mind knowing that we're kind of the direction of the presentation's going, right? It's like getting in the car blindly with someone saying, all right, hey, let's take a ride. We're going to go somewhere. Okay, well, where are we going to go? Right? You're kind of uneasy because you don't know where you're going. And then this kind of sets the stage for that. So just
yeah, no. And so guys, I know that depending on you know, your flavor of your presentation and who your upline is, you might do your presentation in different orders. And the one thing that John and I have kind of been training on throughout the material is not really the order of the presentation, but more of making sure that you guys understand the concepts, because they're transferable. Okay, it doesn't really matter where you put them as long as you hit on these things. But just my personal, what I used to do, and again, you guys do what you think is best for you. But I actually, after I was done relationship building, I opened up with what I'm about to show you next. Because what I wanted to do is I wanted to hit any type of objection before the client had a chance to say it. And I wanted to, again, set myself aside as a professional right off the bat. And so I'm going to call this is what, when I was trained this, it was called the old way versus the new way. So what I'm going to do is I'm going to show you guys, and if you want, over in the right sidebar, there is a old versus new. I put a document there that you guys can automatically download. And I'm going to do my best to draw this out for you this morning so that you guys can see it. But what I'm really going to do is I'm going to draw out a diagram that's going to show them how the old way works versus what the new way is. So yeah, again, it's over on the right hand side, and it's called old versus new. So go ahead and download that. In my flip chart that I have for my in-home presentation, there's one there too. But I really do think that there's power in drawing this out just like a conversation. And just like I've mentioned in prior videos, I like using different colors just because I think that things stand out more. So let me kind of get my webcam on here, and I'm going to do my very best to walk you guys through this.
Morning.
Morning. All right, so Larry, feel free, or any of you guys, to kind of jump in here, but I'm going to go through, and the first thing I'm going to do is I'm going to go over how this old way works. So I'm going to draw it just like I have on up there, old, and then I'm going to say new. So I'm going to say something along the lines of, hey, Larry, have you ever looked into doing mortgage protection before?
No, not really. No.
Oh, okay. Well, if you would have done this about, I don't know, maybe 10 years ago or so, the mortgage company would have just, like, when you did the paperwork for the home, they would have asked you, do you want mortgage protection? And if they said, yeah, if you said yes, what they would do, Larry, is they would have just checked like a little box on your mortgage document, and they would have bundled in mortgage protection into that policy. So I'm going to explain to you how that part works, okay? Mm-hmm. And then I'm going to give you a test at the end to see if you and June are paying attention.
Nope, we'll pay attention.
Okay. All right, so really the old way that the mortgage protection works, Larry, is let's pretend that your mortgage was like $100,000, okay? Just for an example. I don't know what it used to cost for this mortgage protection, but just for the sake of what we're talking about today, let's say that it was like $200 a month, okay? What happened to your mortgage payment as time went down? Oh, sorry, how much your home that you owed on your mortgage as time went down?
You'd be paying down your mortgage, it would go down for sure, yeah.
So this amount was, oops, I cannot spell, decreasing, right? So this is going down, but guess what happened to the amount that you were paying per month for your mortgage payment?
Did that stay the same?
This was going to stay the same, but guess what? How much value that your policy was worth was going down, but this was actually staying the same. Does that make sense?
Yeah, it does. Wow.
Also, guess what? If you were to pass away, guess who would get the benefit from this policy?
Who, the bank would get paid off, I guess?
So if you die, I don't know, as you go, let's say in, I don't know, 20, 30 years, you only owe, let's say 10 grand on your home. I'm just using some numbers here. You passed away, you only owed 10 grand on your home. The bank was actually the beneficiary of your policy, so they got that money. Guess what your family got?
The house, I guess, nothing really.
No, the policy used to be worth $100,000. Now it's only worth $10,000. Mm-hmm. So where did that $90,000 go?
Boy, not to us.
It's gone, right?
Yeah.
So the craziest thing too is, let's pretend, Larry, like, let me just grab a different pen here. Let's pretend like in about 10 years before you passed away, let's say right in here, you refied your home, or you sold the home, or you moved somewhere in here. What do you think happened with all that money that you invested into that policy when that loan was modified or changed?
They probably won't. They're probably not going to give it back to you, I doubt, right?
Well, the thing about the old way, Larry, is it was actually tied to your mortgage. So when you actually modified or changed that loan, that money's now gone, right? So in this old way, the bank was actually making money 4 ways. They were making money off of your mortgage payment, your mortgage protection payment on top of that. They were also guaranteed to get the benefit if you died, plus they kept all the money if you refied your home or you modified the mortgage.
Mm.
So do you think that the bank liked this type of policy?
Yeah, it's a good deal for them.
So the big thing is that this was tied to your loan. That's the real big difference there. So in a minute, I'm going to just get out of role play mode for a second. But in a moment, what I'm going to do is I'm going to toggle to the new side. And I'm going to now draw some reasons of why these 4 things are now better with the new policy. But before I do that, I just want to kind of pause and give the other people on the line here a chance to chime in.
Yeah, Mer, again, just within this explanation, right? You're really tying kind of that. You're really kind of painting a picture of that old way just being like just kind of atrocious for the client, right? It's nothing but an extreme benefit for the bank, and then it kind of keeps me on my toes to, okay, well, what's the new way, right? So there's so much that we're doing here that I really like this.
Claire, anything that you'd add?
I just think it really, John, spot on. It gets you thinking, well, let me hear the new way, because first of all, if you got down to the end and you died at 10 grand, you lost 90 grand. And number 2, if you moved, you lost everything on the policy. It's like, this thing really sucks on this side. So, so I'm kind of like, yeah, let me hear how it is nowadays, because that's pretty bad. So mentally, they're geared for hearing.
And another objection that I heard sometimes when I was in the field was I'd walk up and they go, I just want to do the way that it was where it used to be tied to my mortgage. I heard that like a lot of times, and I feel that me explaining this right off the bat, that kills that objection too before people have a chance to say it.
That's really good, Mer, because I've heard that too. Can you just incorporate into my mortgage payment? Right? And so many people just want to go ahead and add on to their mortgage payment. So this thought and or idea will definitely eliminate that. That's a very, very good point.
So normally when I'm doing this, I'm going to have this out still, but I'm going to just fold it in half just because I don't want it to look more messy than it is on here for you guys. All right, so now I'm going to explain to you how the new way works. And one of the things that I want to just kind of mention so I don't forget was, you see how there's bullet points on each one of these? What I find is really important when you're going through this, there's a lot of information, is pause while you're going through this and make sure that your client understands. So saying something like, hey, does that make sense, Larry? Hey, does that, are you with me? Does that, do you have any questions on that? And just don't rush through this, because if you do, you're gonna leave them more confused than how you found them. Mm-hmm. And for me, what happens was I'm dealing in South Florida with a lot of folks that are later in life, and sometimes I'm not sure if they can actually even hear me or if I'm talking too fast. So I think that's just a really good habit to get into. I prefer to talk so slow that I feel like I'm talking too slow, and I find that that's typically a good speed for this. And if you rush, it makes it sound like you're nervous also, which is not something you want to look like right away, right?
Yep.
Almost just take it to where you're kind of explaining it like you're explaining it to a 3-year-old, right?
Yes.
And how you do have to go very, very slow to ensure that they're retaining the information that you're putting out there. So yeah, I think that's spot on, Mer. Just very slow, very thought out, very methodical, and constantly do that temperature check to, yep, are you guys with me? Do you understand what I'm saying? Okay, perfect. Right? And then just kind of easily and subtly move on. Very good.
And on a side note of that, John, just because I know this is a recording, make sure that you guys, when we're going through this, write down any questions that you have, because what's really going to be important after this video is for you to check in with your upline and let them know, hey, can you clarify this point for me? Can you clarify this part? Because listen, as the presenter, you're the expert. And so if you're having these questions once we're done with this video, there's a good chance that when you're explaining it, the clients might have the same ones. So don't be shy. That's why we're here, is to help you guys to make sure that you understand this. Because right here in this part, that we're explaining how mortgage protection works and the meat and potatoes, and it's a product you're selling. So outside of what I'm about to show you now, this is really the only information I give them on how mortgage protection works. Outside of this, the virtual mentor will help you pick a product. But I was explained this way, John, when I was new. Well, can I have a brochure on that? Well, it's really simple. You die, it pays out. That's how this works. And I'll explain it outside of this, but let me kind of roll into it. All right. All right. So now I'm going to show you guys how what we're going to be doing today works. And just for the sake of easy numbers, John, let's just pretend that your mortgage, you got approved at $100,000. And I'm being very careful to say, say you get approved, because guys, on a side note, there's no guarantee you're going to be able to get them their whole mortgage and budget. So I'm just using general numbers. Like, let's just say that you get approved for 100,000. Whatever that number is, John, that you get approved at, it's not going to change like this old way. It's not going to go down as you pay your home off. If you get approved at $100,000 and you die in 20 years, guess what pays out?
Yeah, the full value.
Boom, that number, okay? So does that make sense? Even if you only owe 50 or 20 or $5, whatever, that, as long as this policy is in force, you're going to get paid out whatever it's worth. How does that sound?
Mm-hmm.
Absolutely, Miranda. Can I just make one point really quick? That I really, really, really love what you did. Again, just kind of talking about the overall general numbers. If we look on just looking at this PowerPoint right now, if we look over on the other side, how she put $100,000 and she said, I don't know, let's just say $200 a month. Okay, I really want you guys to understand something really quick. If you just say, let's just say it's $25 a month, you're painting a perceived value of what they could potentially be paying, and we don't want to shortcut ourselves. So I absolutely love what you did there, Miranda, and saying, I don't know, let's just say it's $200 a month. What we're doing there is we're kind of planting a seed that says, okay, this isn't going to be extremely inexpensive. Here's a rough roundabout number for about $100,000 in coverage, what the bank used to charge you, right? So this is really, really, really good, because we're kind of just we're setting ourselves up to kind of win, especially when we come in and show them a plan that's going to be maybe $110 a month or $150 a month. Now they're like, whoo, that wasn't $200 a month. It's only 110 or 150 or 85 bucks a month or whatever the case may be. Yeah. So again, I absolutely love that. And I would definitely, if you guys are going to use this PowerPoint, when you guys use this PowerPoint, make sure you stick with these exact numbers, because there's definitely a science behind it.
Yeah, good catch. I totally forgot to say that. Thank you. And I love another thing about what you were just saying, John, is I don't ever say for sure. I'm saying, let's just use this as an example. Let's just say you get this. You know, don't ever guarantee anything. I like keeping it as vague as possible. John, you always train that confused minds don't buy, and I try to keep it as simple as possible. And I don't want to use big words like you just learned in your insurance class school. These guys don't, unless they've taken insurance and like they have a license, they don't know what a lot of those big words mean. So just like you said, use words that like your 6-year-old would understand. And most of the time people, you know, they appreciate that. So cool. So guys, listen, so in the old way, you remember how the amount was going down, but your monthly payment was staying the same, regardless of what the coverage was for? In this new way, the monthly payment's also going to stay the same no matter what. Guess what? In most life insurance policies, do you know what happens to that monthly payment as you get older? Does anyone know?
Goes up.
Yep. What they'll do, insurance companies, is they'll get you in at a very affordable price, but as you get later in life, it's going to double or triple. So I've seen a lot of life insurance policies that are like $50 or $100 a month, but as the folks get later in life, it's like $500 a month. Sometimes it goes up to like $800. So what those policies are designed to do is to inflate so large that if you're still alive, you can't afford it. So what do? You end up canceling that policy, right? And now all of a sudden you've paid into this plan for 20, 30 years, and then you have to cancel it because it becomes unaffordable. This is designed to never change. Whatever price you're approved at is going to stay that exact price for the whole life of the policy. Does that make sense?
Yeah.
Yes, it does.
Awesome.
The other thing that's really cool about this is, have you guys ever actually seen like those ads on TV where they'll say like it's like $10 a month?
Oh yeah.
Okay. Have you ever read the fine print on those mailers? No? John, have you? Have you ever read the fine print on those mailers?
No, you just get it's so intrigued because it's $20 a month for $250,000 in insurance. It's like heck
I
yeah.
know it sounds great, but sometimes what happens is all the time when you read the fine print on there, if they're able to advertise a price, what's happening is it's either an accidental death policy, which means it only pays if you die by accident, or it's something that's called a graded death benefit. Have you ever heard of a graded death benefit before?
No,
Okay. Well, you'll read it in the fine print, and next time one of these comes in the mail, do me a favor and read it, okay? Because what a graded death benefit means, and this is why they can actually send you prices in the mail or put them on TV even, is because it means that if you die by natural causes in the first 2 years, it's not going to pay out. It's only going to pay if you die by accident, right? So you just want to be careful. Those are great products for certain people, and we do have those, and sometimes they're a really good fit, but the thing that we don't want to do is ever kind of get involved into a life insurance product when we don't understand the ins and outs of that. So that's kind of what you'll see on the advertising, and that's why it's important to us that whatever the death benefit is and whatever the monthly amount is, that we don't ever have to worry about those changing. Does that make sense?
Yeah, and I've seen it on TV, and I actually paused my screen and read it, and they put so much gobbledygook in it that's nonsense. But there was one I just saw like 3 days ago. It was a 47-year-old woman. They got her a policy for $250,000 for like $22 a month. And when you read the fine print, it's super preferred, and it's a 10-year policy. And what 47-year-old wants a 10-year policy? They're going to outlive it, and it's going to become useless. So, and what agent would even sell them that kind of a stupid policy anyway, unless they requested it, you know?
Yeah, no, and we're actually going to talk about that too in a second about some of those too. You're right. Sometimes there are ones that they'll put on TV where they do require a medical exam, and what we're going to talk about today is not going to require one. And in just a moment, I'm going to go over how that part works and why I agree with you. We don't want to actually do a medical exam. Absolutely. So there's 3 things there. I'm just going to pause. I'm hitting on medical exam, accidental death, and graded death benefit, because those are the 3 killers that you're going to have that could get your policy canceled without you getting these people back on the phone. So I'm hitting this before they have a chance to say it or having an open discussion with them. As we talked about in the previous videos, that everything up until the time when you show them the price, you're a consultant. But after you put the prices down, you are now a salesperson. So my philosophy is let's figure out what are the common pitfalls and let's talk about them with these people ahead of time. And sooner the better, in my opinion. Cool?
Yep, you're just eliminating the objection before it comes up, guys. That's really what we're doing here. And trust us from being out in the field and our previous experiences is that this is the stuff that you want to implement for the mere fact that you don't want to get that, because people are going to hang on to that type of information that she's talking about right now, is that, oh, you know what, I did get a flyer in the mail not too long ago and I didn't read the fine print. So you'll watch even people get up and excuse themselves to go read that fine print on the policy that they looked at, and they'll bring it back to the table. Oh my God, you're right, look at this. So just get out in front of the objection before it even comes up, and that's exactly what she's doing right here. Good job, Mer.
So the third thing that is different is, you remember before how the bank was the beneficiary? If you died, the bank got the money. Remember that?
Uh-huh.
Yeah.
So in this new way, you can actually pick someone, John, that would be your beneficiary. So if you die, they actually get the money for the policy and they take care of paying the bank. So in your situation, who would be your beneficiary?
My wife would be.
Okay, what's her first name?
Jessica.
So now, and a lot of times I'm going to have people say, well, what do I do with a single person? Well, let's pretend, John, you're single. So John, I know, so who would be your beneficiary?
Probably my mom.
And what's your mom's name?
Dina.
Dina. Okay, and how do you spell that?
Dina.
Okay, Dina. So now I know why John wants me here right off the bat. I know it's for Dina. I now have her name. So what can I do now through my entire presentation every time I'm talking about the policy?
You can
right?
reference my mom.
Yeah. Your mom. And so when you pass away, not if, it's when you pass away, Dina, guess what, John? Dina's going to get cut a check in this scenario for $100,000. Okay, let's pretend that you only owe 10 grand on your home. So Dina is going to pay the bank 10 grand, and guess what she gets to keep?
The remaining 90,000.
Yeah.
So how could that help your mom? God forbid she loses you, and now she's got a check for $90,000 and the house paid off.
I think that'll give her the ability to pay off her car and
Cool.
pay off her credit card, right?
Awesome. So you see what I just did there? He's already picturing himself and his mom having extra money in a home right off the bat with this new way, before we've even gotten into any of this nitty gritty.
Good stuff.
Yep. The next one here, remember, John, a minute ago when we talked about if you refied your home or you sold your home or paid it off, what happened to your policy?
Yeah.
Remember that? What happened to it?
The bank.
The bank. I told you there was going to be a quiz, right? That was a joke. So the new way, you'll be happy to hear this. It's portable. Okay, so because this is not tied to the mortgage company, this is tied to Dina, right? If you move, if you refinance, if you pay the home off, whatever you do, Dina gets to keep the policy. It is portable. Does that make sense?
It does.
Cool.
It absolutely does. And you don't have to start a new policy at a new price.
No,
because the older you get, the more expensive it becomes, right?
Absolutely. So that number, that 100 grand or whatever the number is that you get approved at, that's the number she's always going to be able to count on, no matter what.
Mm-hmm.
By the way, Mir, can I put
Yeah.
a little comment? I want to go back one step to the $100,000 payout. I always like to also point out, because a lot of people don't realize this, that payouts from an insurance company are not taxed. So, and I say to people, and by the way, that $100,000 is basically cash to you. It's unlike a winning lottery ticket where you're going to cough up 30, 40, 50% in taxes. This is cash all to you because proceeds from a life policy are not taxed. So I even makes it sound even better. It takes
Cool.
2 seconds to mention that. So.
Gotcha. I like it. All right. So that portable part made sense about how you can, if something happens, you get to take this with you. So if you sell this home and move, across the country, she's still got that policy.
Yes, it does.
Okay, cool. So this one right here, this next one is, I can actually shop around for you, John. I'm not I have access to about 30 different carriers. So what I did before I came here today is I shopped them all for you. Basically, we're going to find one that you like, that's affordable, that I think that you have a good shot at getting approved for. And no matter what's going on, as long as I know about it, I'll be able to provide you an option for that. Does that make sense?
Uh-huh. Yes, it does.
And Mir, real fast, just a comment on this thing. If I get a sense that the client is the type that has like 6 agents have come to their home, or they're the shop around type, I always find it good to point out, say, if you were buying a car, I would suggest you go to 10 different dealerships because you can get 10 different prices on the exact same car. Life insurance is completely different. If you go to 10 agents and price the same policy, you're going to get the exact same price. So shopping it around does not get you a better price because the insurance companies set it, not the agents. So the nice part about it is I have access to 30 different carriers. I'm not limited to one like a lot of agents are. So I know I can always get you the best price.
Cool. I like it. And then I'm going to transition into this next this next diagram by asking this question. So John, really, I know we talked about this a moment ago, but one of the things that I think is really one of the most valuable things about this way we do it now is that there's no medical exam. Have you ever done a medical exam before to get life insurance?
No, I have not.
Okay, so they're either going to say no or they're going to say yes. And if they say yes, then I'm going to say, so tell me what happened when you did that medical exam.
There was a registered nurse, I believe, that came out to my home. She drew a bunch of vials of blood, and then I had to go in the bathroom and pee in a cup.
So the price that they gave you, what happened to that? Did you get the price that they said, or did it go up, down? Tell me what happened after you got your results back.
So what happened is that the agent came out trying to offer me a $100,000 policy, and he wasn't too particular on the price. He just basically said that it was really up to my vitals, and I tied him down to just a ballpark figure, and he said, I don't know, it could be between $50 and $100, and actually came back at $225 a month.
Okay, yeah, that's pretty common, actually. You know, I'm sorry that happened, but you know that happens about 70% of the time, where someone gets a much higher price or they get declined, you know, just altogether, and then they don't get offered any coverage. So you're that's very, very normal. And I'll pause. So that's normally what happens. And I do ask this question here because I want to know if he's done it and what happened. Because here's the thing, if he did actually get the price they showed him, which rarely ever happens, or a better price, I'd be like, congratulations, that's like only happens like 2% of the time. Right. But now I know where he's at. I know how educated he is on how this all works, as he's been down that path. But if John just told me I did a medical exam before and I got screwed, you know that you're probably fine on this next topic. I still cover it anyways because his spouse might not have been as involved in that product. And I want to do, for me, I know that if I do the same presentation every time, my results are going to become consistent. So I still go into this, but is there anything anyone wants to add on that kind of conversation before I move on to how to explain this?
No, I think it's just a matter of having it, right? And again, just like you said, you want to know if they've gone through it, and if they haven't, you can also get excited, right? If they haven't gone through the process, I would get excited because they didn't potentially screw themselves, right? Because so many times that people will go and do this side of it, and small traces of something will come back in, or elevated level of blood pressure, just elevated levels of sugar in the blood, diabetes. They didn't necessarily have diabetes. They ate something weird before. So it's like you can kind of get excited that they hadn't gone through it, so they didn't screw themselves. So now we're kind of starting out with a clean slate, if that makes sense.
Yeah, and if most people haven't done a medical exam, so I'm like, no problem. I'll kind of explain to you why we want to avoid it altogether anyways. And I'm going to draw out a diagram that looks just like what you guys see here over on the right. So I'm going to say, John, here's the deal. So, and again, so in life insurance terms, it's called simplified issue, means no medical exam. And fully underwritten means a medical exam, but do not use those words with your client because they don't know all of those words. They know medical exam and no medical exam, blood work, no blood work. Okay, so that's how I try to talk to them. So I would say, all right, John, so here's the deal. So if you went out, let's say that, you know, you went and did a blood work policy, just the nurse, they're going to send their own nurse out to you. They're going to draw blood, right? You put your finger in here. They're going to go draw blood from your arm. They're going to check your, you know, your vitals. And really what they're trying to do, John, is they're trying to find something wrong so that they can charge you more money for your policy. Okay. A lot of times I hear clients that said, well, I just went to my doctor last month and got blood work and everything's fine. I want to do it. Well, I've had that happen to me, and I've done blood work with a client and come back and they've been declined life insurance. Because what happens is they're taking your vitals and they're putting you in a table. They have 16 tables to go from. So there's 1, 2, 3, 4, there's A, B, C, D, E, F, G. Like they're going to go down 16 tables to a decline. Okay. So what happens is, let's pretend that there's preferred, standard, A, B, C, D, whatever, and we're going to go all the way down. So let's pretend that for preferred, $100 a month. Let's just use easy numbers here. Standard's $100 a month. Let's say that there's nothing wrong with you. You're good to go. It's $100 a month. Well, they could say that preferred is $75 a month, so that you're above average. Or they could even quote you super preferred, which could be maybe $50 a month. I don't know how many people get super preferred, but only 2% of the US gets preferred. Okay, but there are some agents that'll go ahead and quote you that just to try to get you, to fill out an application. With this, let's pretend that this next table, let's say you have high blood pressure. Now we're up to 150. We have high blood pressure and cholesterol. Maybe there was a surgery last year, and we just keep going all the way down, and the prices just keep going up. Depending on how many medications, how many surgeries, what the vitals look like, they're just going to keep going up, 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 all these tables. So what ends up happening is 70% of people that do blood work for this type of policy, they get put in what's called this graded or declined. So 70% chance that when you do blood work, you're going to head over here outside of that standard box all the way over to a higher price or declined. Because again, they're not looking to go ahead and just, you know, see if you're okay. They're trying to find something wrong so that they can know what their risk is and charge you more money for your policy. And I'm gonna pause here. Yeah.
Fast comment here too on it. I also explained to them, I said, and the exam that you get from the insurance company, they're looking for very different things than your doctor. Your doctor's looking for things based upon your family or medical history that he knows of. He's not going to test for everything because it's way too expensive. The insurance companies are only looking for those things that they can justify a higher rate. So your doctor may not find something, but the insurance company surely will if there's something there because they want more money out of you, basically.
Yeah, that's so true. They're looking for way more stuff. Plus, guess what happens once you do this? Now they've looked at it through a new set of eyes. Whatever they find is now on your medical report, your MIB. And Larry goes, "That's not Men in Black. That's your Medical Information Bureau report." But now all the other insurance carriers have access to this information. Does that make sense? Did you have any questions on that?
Nobody, no questions, and it does, again, right? Love what you're doing here because you're getting in front of an objection before it comes up, and the whole idea is to definitely just scare them away from the blood work, and that's exactly what she's doing here. And you're gonna, you know, people that are gonna look at that originally had blood work done in the past and tend to be okay with it. Well, I'm a little bit older now, so I don't know, I'm worried about, you know, maybe this lump here, or I'm worried about this, and yeah, you know what, I'm gonna go ahead and stay away from it, or I haven't been breathing properly in the last year, you know, whatever the case may be. So that's all you're doing, is you're just scaring them. That's the whole idea behind this, is just scare them away from the blood work, because that's honestly, that's the best thing for the client anyway, is to have them not do the blood work. So this is perfect, pal.
One more thing too, a comment, the old saying that, you know, facts tell and stories sell. When I'm doing the avoid medical exam, and I've had a bunch of stories like this, but I try to keep them fresh because this actually happened. I helped Lindsay on my team with the 911 just the tail end of last week. She had a guy who 3 weeks ago got declined on a full med policy by an agent. He never even offered up the non-med option, and the guy had protein in his urine. There was other issues, and he probably could have flown by on a non-med, but the client, this insurance agent just crippled him, you know, because of it.
Well, that's a good point. Not all insurance people they meet with has a non-med option. Yeah. A lot of companies are only fully underwritten, which is why what we meet with people on is so important. And I think you're right, Larry. There's a couple points that I want to cover real quick to make sure we don't miss over it. But then I definitely recommend following up with a third-party story, because you've got to paint this picture a little more. But let me just point this out. So there's a couple things. When I was listing how much it costs, you know, again, I'm not putting down 100%. This is for sure how much it costs. But I'm using ranges, and I'm giving them examples of, okay, let's say you have high blood pressure and cholesterol. Let's say you had a surgery. Let's say you have blah, blah, blah. Let's say you have this, and just paint some of my pictures there, because almost every single person that you meet with is going to have a medication, or they've had a surgery before. And if that's happened, they're probably not going to get standard pricing. It could, but chances are it's not going to happen. You're not doing these people, you're doing them a disservice if we get them into a fully underwritten policy now. And because I wasn't very good at this when I was new, I did the same thing, Larry. I met with a client, and he wanted to do $1 million life insurance policy. And I was like, he's like, I don't care. I went to the doctor last month and I'm fine. I want to do it. I'm like, okay. Same thing happened, but he came back now with untreated diabetes, protein in his urine, and they didn't offer him a table. They declined him, and now I can't get him any type of coverage for them. I think it was 2 years I had to wait before we could do that. So instead of protecting him with something, get that and secured, now the gentleman, I totally, you know, he has nothing. So, you know, we don't want to do that if we can avoid it.
That's a really That's a really good point, Murr. And you can even kind of tie in maybe a story to something that they have, right? Just like you did. So if you know that the client has diabetes, it might not be a bad idea to tell a diabetes story. But in addition to that, as you're kind of circling that A and B option there, throw in some of the symptoms that they'll have that you found out over the phone. Right. And so you can, like, if someone has AFib, I would definitely allude to AFib in this idea. Right. Or if someone has a CPAP machine, I'm going to allude to sleep apnea. Right. Or if someone has, high cholesterol, diabetes, got diagnosed with cancer, what have you, definitely incorporate some of the things that they have into the reason as to why you start going down or higher into the 16 categories, right?
Yeah.
Does that make sense?
Yep, absolutely. The more real you can make it for them, the better. So I recommend explaining this fully underwritten medical exam option first. Again, get that confirmation that they understand how that works. And now I'm going to explain to them what we do. So, John, what we do is we don't require a medical exam. The only thing that the decision will be riding on is what your doctor has already put on your medical records. So there's no exam. Typically, our prices are somewhere in the neighborhood of these two right here. And there's no exam. And I have about a 90% success rate of helping the clients I meet with at or around the prices that we talk about today, instead of a 70% chance of getting you declined or getting you a higher price because they're going to go look for something wrong with you. Does that make sense?
It does, pal.
So crucial.
And so I say at or around because, again, I can only be as accurate as the information they're giving me. So it's not going to be perfect, but the better job we do. And I find by doing this before I ask them their medical records, or medical questions, do you think they're going to be that much more open-minded to telling me the truth after I've opened up my presentation with this? So now they're grabbing tubs of stuff and bringing it over, and I'm like, oh, I appreciate that. But again, stories really do tell. Another one that I share here is a friend of mine, thank goodness, got a plan that didn't require any blood work, which is what I did for me and my kids and anyone that I meet with. I recommend getting one of these first. Let's get this in place, and then if you want to experiment all day long and see where we end up here, I'm okay with it. But that's always what I do, is I help someone with that one that doesn't need blood work first, and then we can go experiment. But what ended up happening to a friend of mine is they did blood work on a policy here, and they were in their mid-30s, nothing wrong with them, and they came back as a standard table C with the price jumping from what they thought was going to be around $100 a month to $300 a month, because now they said the cholesterol count was high. So who knows if you got in a fight with your spouse in the morning and now your blood pressure's high. John, Jessica, that never happens to you, right? You wake up and gotta get in an argument, and that's the day they're coming to do the blood work, and oh boy. So we just don't want to experiment right off the bat, if that makes sense.
And I'll give you another version of a story that I encountered. A lovely couple in Stamford, Connecticut that I sat down with. She knew what she wanted. She was great because she said to me, I'd like a $75,000 policy, because if Stefan passed away, I would sell the house and that'll give me enough money to do what I need to do. I said, all right. So when I got to this part, he said, well, I'm extremely healthy. And he did. He looked healthy. He said, I'm extremely healthy and I get my checkups. And he says, I think I could get a better rate. I said, well, you very well might. And I explained the risk to him. And I said, well, why don't we at least apply for this? Once the policy is issued, you own it. As long as you make your premiums, they can't take it away from you. I said, then when the policy is issued, I'll come back and we'll apply for the full medical. So we did that, got him approved, 75 grand. It came to $69 a month. I still remember the numbers. And when I came back to deliver the policy, I said, all right, let's do the other one. We did Term Life Answers, and their minimum's 100 grand. So we did a $100,000 policy, and it came in just under $50 a month. He did get preferred. He was right. He was healthy. But I said, well, I'm very glad that we did it the way we did, because if there was a problem, you would have regretted it. And he thanked me. So don't be afraid of explaining the non-med to people, thinking, well, what if they're really healthy? If they're really insistent and they want you to come back, you'll do a full med. That's okay. But at least they're covered just in case something bad comes up in the reports.
Yeah, and you know, Larry, that's funny. I've offered that. Normally, the way I say it is, listen, if you want to experiment, let me know. I'll come back. I've never had anyone call me back to do it after. So that's great that he did take you up on that and that it worked out. And I'll tell you, for me, I've only done, I think, 6 or 7 fully underwritten policies. One of was my own, which I got standard, and another lady got standard, and the rest got declined. There was no offer given. The answer was no. So when I'm sitting here saying that, you know, this happens, that's right in that 70% mark. You know, we're not joking around, and I take this real seriously. So this was another thing that was really kind of hammered in. We are here for one reason, and to make sure if this family dies, the family's going to be okay. We're gambling, giving them a 70% chance to get coverage at an affordable price. Like, not get coverage and at an affordable price is a gamble, and we're not there to gamble with these people. We're there to help them.
Yeah.
So, you know, this right here is something that you're probably not going to be comfortable with your first time seeing this video. Like, I really, and Larry, I know you did too.
Yeah.
This is done on repeat and written out and practiced. And if you're not comfortable with it right away, maybe you just practice it more. But this here changed my entire business. It changed everything for me, just so much. So I really do, you know, encourage all of you guys to take the time to master this thing. It's going to make a huge difference in your conversions. So.
Yeah. And by the way, once you learn it, I mean, my first 2 weeks in the business, I sold 3 policies and all 3 canceled. So it was not a glorious start. But the point is, and I really botched this. I was just terrible at it. And I still remember my second week, Miranda said, dude, when are you going to learn the system? So I watched her video like a dozen times. And I always jokingly say, if you put a blonde wig on me, I could probably pull off being Miranda for this training, because I really made a point of learning it. And it's once you learn it, because sometimes say, well, it's so long and there's a lot. No, once you learn it, you can blow through this in like 7 minutes. I timed it. You can, without getting too long-winded, as long as they don't ask you lots of questions, and if they do, actually, that's good, because they're really paying attention then. But if you go through this and you make it sound interesting, you can get through this in 7 minutes. This is not a lot, but it's worth all the dividends it'll pay.
Yeah. Cool. Anything else from you, John, Jim, before we go on to just this one little wrap-up part here?
No, pal. If I added anything, I'd be diluting it. It's all good.
So one more thing I forgot to add. So I say sometimes we'll be in the neighborhood of these two, and just for the sake of kind of what we're talking about today, maybe be somewhere like around here. You know, we're just we kind of take this little path in here and give you a 90% chance to, you know, to get approved. So with that being said, and that now is when I jump into my role and purpose. So guys, there's really 4 things that we're going to do today. Number 1, now that you understand how this works, I want to verify your health information. Some of my carriers, John, as I mentioned, I work with like 30 of them, right? Some of them are very, very picky, and some are lenient. So, you know, as long as I know what's going on, I can find you the best thing at the best price. And just keep in mind, I'm kind of like the attorney, they're the judge. So, you know, just let me know what's going on, and we'll find something for you today. The second thing is, I have a couple questions on how you're set up in the home. I really want to determine if this is a luxury or a necessity. Okay, sometimes I meet with folks and I determine that you don't really need this that much, and if that's the case, I'll be out that front door faster than you can kick me out. Does that sound fair?
Yeah.
Cool. And the third thing I'm going to do, John, is after I've kind of evaluated everything a little bit further than we did on the phone, I'm going to kind of use my due diligence to show you some things that I really think are a good fit for you. What you're going to do is find one that you like, that's in budget, that I think we have a reasonable shot at getting you approved for, and then we're going to go ahead and apply for it today. So the fourth thing really is to just fill out that application. It only takes a few minutes. We're going to fill that out. I'll submit it to the carrier tonight. Typically I hear back, it could be a couple days, but depending on you know, the carrier, it could take a couple weeks. But it's really simple, and then basically I'll give you a call and let you know if we're approved. If we are, cool, and if not, then I have, you know, like I said, about 29 other carriers we can pick from. Does that sound good?
Good.
Yeah.
Okay, cool. And so off we go. So I used the word today and tonight at least 10 times during that. And I want to get like a yes after every path, because one of the things that really kind of messed me up in the start is I forgot to tell them that there was going to be an application today. And I didn't hit that nail on the head. And when I left the end of this awesome presentation, they wanted a business card. They
Yeah.
wanted you to call me when they thought it was great, but they'll call me and let me know. And that's not what we're here to do. We're here to do something today. And I don't want to leave that, you know, I don't want to leave that out. You know, I want to make sure that's clear. So.
Mm-hmm.
Yeah, and I love like again, I'm such a huge proponent of just like transition, right? So transitioning from one topic to the next too. And if you really kind of look at that bottom part of how you talk about kind of where your price point's going to fall, again, just think of those 4 categories in your transition, right? So really what we're going to do today, and then boom, now you're transitioning from this part into your role and purpose. And then if you can kind of just think of it, right, is in order for us to be able to get you that price, your first topic is I'm the attorney, not the judge. The more information I know, the better the price I can get you. So you guys need to tell me absolutely everything that has happened to you in the past 10 years. And now you're transitioning from this particular topic into the role and purpose. So always just kind of use those little indicators to be able to get you to the next step. And I think that that's perfect, bud. Love it. Love it.
Awesome.
So that's it, guys. I have a couple questions. Okay, would I be allowed to bring some flyers with me to show them the small print? I don't bring any of that stuff. Anytime you start handing them out stuff, and except when it's after the presentation, it's all stuff that you're giving them too much to think about. You know, this is my opinion. So whenever I'm doing this, and I know I've got kind of blank papers here, but I actually have like a spiral notebook that I'll have these in, and I'll just keep flipping the pages because I don't want to leave anything on the table that they can say, hey, can I just keep that? Actually, no, I need this for my records, but I'd be happy to like jot something down on the back of my business card or what have you for them. Basically, I will give them everything they need after they're done their application. You know, so I don't know if that kind of answered the question, but I think you can explain it just fine on your own without making it more confusing for them.
And Miranda, too, that's also why we don't print out, like we don't type up the numbers that we're going to give them for quoting purposes so they can actually keep it. That's why we actually handwrite it on either a piece of paper. I always liked handwriting the quotes on the back of their lead sheet because that lead I had to keep, right? Oh no, I have to keep this for my records. So then it's just these little things that you're doing. So it doesn't say, oh, you know what, can I take that and we'll look over this tonight. So we're kind of eliminating some of those ideas in their brain by not really giving them any information. So then that way we can keep it super simple and they can kind of make that educated decision. So kind of just something to think about there too, right? Yeah. Go ahead.
The thing is, the my internet's bad. Yeah, I think the only thing they really need to be left with to think about is, do you want your family to have a policy that will protect them if you die? That's it. All this other stuff is just kind of explaining to them in the back end stuff. I have another question. Where is this placed in your in-home presentation? I would ask your upline where they would want you to put it in, whatever version you're being trained on. But for me personally, I open with this. This is, hello, I relationship build, and I go right into this. But you know, I think that it works just like everything that we've talked about, wherever you put it in. I would recommend if you're not using it, if someone starts asking you questions about like, well, how does mortgage protection work? Or what happens if I move? What about this? Like if they start asking you these questions, that's an invitation to go into that diagram. And sometimes when I was trying to make my presentation shorter, I would not do this, and I was cutting corners and probably not doing very good at my appointments. And then I would end up having to go through all this anyways. And then I was like, man, I should have just opened it up. I probably missed some people because I wasn't doing it like the way I normally do. So again, ask your upline.
And not only that, if you leave this out, because I'll go back to my first 2 weeks, one of the guys that canceled on me, I did this policy, but I didn't get into the 16 tables and everything like that. And little did I know that 2 weeks later, he was going to call me back because another agent came in and sold him a full med policy for a lot less money. but I wasn't versed well enough in the very beginning, and I lost the policy because we weren't comparing apples to apples. I don't know how it ended up, but I know I lost the policy over it. So for my lack of experience.
There's one more question that came in, and I'm glad this was a good one. So in the old way, the amount per month did not go down with the face amount.
Mhm.
Okay. So whatever this amount's going down because you're paying your loan off, right? But the thing is that this premium, whatever that, let's say this $200 a month, your amount that the policy's worth's going down, but that 200 did not change. So you were still paying $200 a month for a policy that was worth like a quarter of that. That was a set number, just like, as the years went on. Does that make sense?
It does. Yeah. Kind of that decreasing term idea, right?
Yep.
In addition, these old policies, they really suck because if you hypothetically, let's say you took your mortgage out with Chase and I took my mortgage out with, I don't know, pick any other bank, and each of these banks are offering these policies. Chase maybe, but you didn't know any different. Chase wasn't all that competitive on their rates, so maybe they were charging $220. My bank was a little hungrier and they wanted to treat their clients better, and they were charging $190. But there was no shopping around. There was no comparison. There was like your bank offered it. Yeah, I couldn't go to Wells Fargo to get mortgage protection tied to my mortgage because they weren't my mortgage company. So you were limited to the bank that you were dealing with. So it was a really raw deal for clients.
A question that came in was, when you do this type of presentation, how long does it take? I think we kind of answered that. It should probably add like 10 minutes to your presentation if you throw this in the front. My presentation was a lot longer just because I don't feel like I had the sales background that some people come to the table with. I had like almost zero sales experience. So mine was a little bit longer than the average just because I was so intentional about hitting up objections before people said them. But if you're in that 1 to 1.5 hour range, I think that's awesome. And again, this might add another 10 minutes or so.
Well, I think we shouldn't negate the fact that we're educating them, right? And when you educate the client, you're kind of empowering them. So I think that there's just a lot of power to this, and there's so many kind of subconscious things that happen here that I think it's a really good idea to incorporate. So it's, I don't know, I definitely sacrifice, if you will, an additional 10 minutes to increase my overall percentage. And then that way, like, again, what this is doing is that when other agents come in behind you and offer up those ridiculous prices, they're now educated to make a decision for themselves and say, no, I don't want that. Right? I don't want to deal with the blood work. So not only what is it doing is you're educating them, but you're educating to kind of save the deal in the future so people don't come in behind you and offer up these ridiculously low prices.
John, I rarely had people call and cancel because of a replacement or cancel at all. Like after I left the home, if they canceled, it was one that I pushed. I really was being very creative of making sure that they did something today. But overall, if it made it through those next couple days, it was rare that I'd have someone call and ask to cancel something. And I think this was a big part of that. Now that you mentioned that, John, is going into this every time. They weren't going to get a flyer in the mail and go crap and cancel my policy. No one else was going to call behind me. Piggybacked with what we talked about the class before this, John, with them having a tailor fit plan that they made up for themselves with the critical period, bundled with this information. I had a lady call me yesterday to write 3 policies on for her newly born kid and her boyfriend and other people in her home because they just were so impressed with the way that we strategized everything for them. So I find more of that than people getting cold feet.
Yeah, and Miranda too, just really quick, sorry Larry, but Miranda too, it's you notice how you go out, you buy a car. Let's say you buy a white Mercedes SUV. When you're on the road, do you notice it's just subconsciously you start noticing all of the white Mercedes-Benz SUV on the road? You know what I'm talking about?
Yep. Right.
Yep. And so this is kind of the same concept. When you kind of go down that path of mortgage protection and or life insurance, it's stuff that you just start noticing. And so if they're not educated properly about it, they're going to start, again, it just catches their attention. Oh yeah, I just did life insurance. Let me look at that. Oh my gosh, like boom, I just got, whatever, a $200,000 policy for $150 a month. And this thing on the flyer is showing me $150,000 or whatever it is, right? $200,000 in coverage for half the price. Let me check this out. Well, we're educating them not to act on the things that they see in the future. So it is so powerful to educate them properly so stuff like that doesn't happen, so they don't hurt themselves, so your policies don't get replaced, so they don't kind of go on that path. Because, right, we've heard so many horror stories of being in this business. Carl Miller's story of the guy that had, younger, healthier guy that had traces of TB. Well, here's the thing, like, as a 38-year-old man, what happens in another 10 years when he gets a family and he wants to go out and go after additional coverage? We can no longer give him that additional coverage because on his MIB report, the Medical Information Bureau report, it now shows that he has traces of TB. Not a single carrier is going to give him the coverage. Well, what's going to happen in 2, 3, 4, 5 years from now when he grows the family? Just like Miranda said, they're going to reach back out to you because they know that you're going to put them in the safest route possible to ensure that their family gets coverage. There's so many things that this process does to help benefit, to help the retention rate, to help educate them, that I would highly recommend that we incorporate this. So just another ad there, bud.
Yeah, can I just say something too? This is kind of, it's funny, as much as I've done this and talked about this, it's almost an amazing revelation that just hit me as a takeaway. Because, I know why we do the old and the new. It sets us up different, all the reasons we gave earlier, but it became so clear to me, the old, sometimes the bells go off, but when you explain that, John, that's so true. It's like, I think back, once I mastered this, I can't remember a policy that ever canceled because somebody got a better price somewhere else. This kind of immunizes your cancellation rate, because basically when the next guy calls up and says, I can do a better rate, it's like, no, so-and-so was already here and helped me through that process, and I see this is the best one. That's powerful. I think you nailed it so spot on. It's like, I actually got to bring that up as a new point when I train on that, because I love that spot. I never really heavily emphasized it, but it's the immunization from a policy canceling later on, because you really educated them. So powerful, really good. I love that.
And Larry, that's a good ad. And I just coach you all to wrap up your presentation with that too. Listen, guys, you might still get phone calls, about, mortgage protection. You're still in the system. It's going to take us a little bit to kind of get all that, pulled out of there. So if anyone does call you, which they probably will, just let them know that you've already been taken care of by the best agent in Florida, and just tell them that you're all set. Okay. Right. That's it. And they're like, okay, cool. And like that's a done deal. I know Carl Miller I think it was him that says, like, and if you ever get anything that you're not sure of how it works, just give me a call. I'd be happy to go over it with you. Like if you get any weird flyers in the mail, but I really do believe that if you do cover this the way that we talked about, that's not going to come up. You've covered it all already, especially when you're going over the simplified issue part. You should say, yeah, and this is another example of what you get in the mail, or when you see on television. Larry mentioned earlier, pause the screen for a second. It'll tell you it's for super preferred, or this is based on preferred pricing, which is only 2% of the U.S.
Right.
So, yeah.
Cool.
Awesome stuff, guys. Well, this is a wrap. Unless there's anything else that you guys want to add, do us a favor and post your favorite takeaway on your GroupMe string. And again, don't be shy with questions. We want you to ask questions. It's very important to us that you understand what you're explaining to your clients. Because the better, you can do it, articulating it slowly with confidence, that's going to just help your close rate get up into that 80 and 90% once you guys got this all figured out. So awesome stuff. Thank you guys.
Good job.
We will see you next time. With that, you got anything, John?
Just after listening to this audio, just immediately get with your upline and let them know that you've finished this part in the process.
Cool.
Sounds
Thanks, everybody. Good job.